Hello and welcome to this webinar on preparing for upcoming changes to the AML reporting within the proptech space and the property world in general. I'm joined today by my guests, James Dickey. He is the partner from CMS Law. Hello, James. How are you doing?
Hi, nice to see you. Yes, I'm well, thank you.
Nice to have you with us. Glyn Trott from Calmany. Hey, Glyn.
How you doing, David? Good to see you again.
Nice to see you. And Phoebe Wallace, the Chief Revenue Officer from Griffin Bank. How are you, Phoebe?
Thank you. It's a pleasure to be here.
It's great to have you all with us today. We're talking about things that are affecting my industry, particularly as an independent agent. We see all sorts of legislation changes and different things being thrown at us at all times. One of the most recent changes has been to the requirements to AML check within the letting sector, particularly, which is something that we never previously had to do below a certain amount of rent. We now have to make sure that we're checking on all the individuals involved in any letting transaction, both in terms of landlords, but tenants, permitted occupiers, guarantors. The list goes on, and you may be forgiven for thinking, as an estate agent, that you need to do one check at the beginning and close your eyes and tick a box and it's all done. But the reality of these OFSI regulations that are coming in is a lot more stringent than that, and that's why we're joined today by three experts from representing different angles. So we've got the banking aspect, the client accounting aspect, and obviously the legal aspect of this as well. I think we'll just start with a general question. I'm going to start with you, Glenn, if that's all right, just to get us started. Um, you provide client accounts to a lot of the industry agents out there. Uh, they're aware that they need to do some checks. They will be perhaps shocked or surprised to know that they have an obligation to carry on checking. Can you give us a little bit of background there, please?
Like I said, we provide client bank accounts working with Griffin, our banking partner. So yeah, just if you think classically, agents just go to their high street bank, open a client account, and you go. And that's really been the norm for so long. But that also led to changes in I think it was the AML Fifth Directive 2018, the appetite banks have around client accounts. So they just view the state agency, letting agency sector as high risk, and they started closing those accounts. So that was causing that classic problem. Big reason we came into existence, but actually a big challenge that Griffin solved because they introduced on the landlord side, we need to verify who we hold funds for. So even before OFSI came around in November and even caught us out. We were doing those checks on the landlords, so that was starting to become normal. Our clients that were joining us, a lot of them were like, "Why do I have to do this? I haven't had to do this," and we're like, "It's just a requirement. That's what we need to do."
It's interesting. We very often take that view as agents. Why do we have to do this? And sometimes when we don't understand why we have to do it or why it's important, there is this propensity for us to bury our heads in the sand. But perhaps Phoebe, you can tell us from your perspective the fines here that are going to be levied against agents who perhaps aren't complying, or people in general involved in these transactions that aren't complying. That they're extremely onerous. So there's no room for burying heads in sand at the moment, is there?
No, and for banks, these fines are not a new thing, and they hit the entire span of the sector. We know that NatWest and HSBC have had some pretty outrageous fines, and James can talk more about this than I can. Over the last few years, we've seen it with Starling. There is increased scrutiny from all regulators on AML regulation, sanctions regulation. Um, Financial crime is a thing. It's not something that we're getting rid of. And the more banks like Griffin that do facilitate uh, very low touch digital journeys into bank accounts that are very low friction for the end account holder do pose a fairly high risk of fraud and financial crime. And so the fines aren't great, but it's the real world reality of it. And we're not being fined because the regulators are punitive. We're being fined because we're losing the funds of your everyday consumers, because we are enabling bad actors. We are facilitating the proceeds of crime and kind of pushing that money out into the wider economy. It's not simply like regulation for the sake of regulation. It's because there's real world consequences of not doing these checks. And being perfectly honest, when I rented one of the first flats I rented as an adult, the letting agent ran off with 3 months' rent and my rental deposit, and no one could find them. And I had to find the landlord through Companies House and speak to his accountant. So I've been that person that's lost the money. I can see why these regulations are coming in. I can see why those fines are important. But it does feel like a lot for small businesses.
It does appear that way. I'm sorry that you had that experience. It's certainly the exception to the rule. I'm hoping in most cases. James, from your perspective, when we hear things like bad actors, obviously there's been a lot of political activity recently with sanctions against various different states and countries. Give us a bit of context. Who are these bad actors that we were referring to? Who should agents be on the lookout for, if you like?
Yes, and I think the reality is there is no typical profile of a financial criminal, and I think that's what the regulators would really emphasize to anybody within the regulated sector, talking about that widely. You shouldn't make assumptions about who you're dealing with just because of their individual characteristics. They can give you triggers to do further inquiries, but you should be having an open mind with everyone. That being said, the regulators have been relatively useful in sort of providing guidance on sort of unusual elements that should raise questions. So you're looking for your typical things like unusual commercial structures, a real desire to get a commercial transaction across the line as soon as possible, cutting corners wherever possible, the real sort of pressure of urgency. And then there's the characteristics such as unusual jurisdictions, people that are coming from jurisdictions that perhaps don't have as stringent controls as the UK does. And then there's the obvious hotspots. The government does maintain a list of high-risk territories. It's the ones that you might expect, whereby there's sort of prevalent tax evasion and prevalent sort of ability to hide your identity.
It's interesting from an agent's perspective. There is that urgency that you mentioned, that commercial imperative to try and sort of push certain deals across in a space that has seen a lack of supply in general. All the transactions these days have that sense of urgency. There are no tenants that kind of turn up and are perfectly sort of chilled out, waiting for the perfect time to move in. And you tend to find, therefore, that as an agent, you're always under pressure to try and sort of push things through and get through the compliance side of things as quickly as possible. So in one sense, what you've said is absolutely true. We cannot afford to sort of pick only particular cases out. We need to be able to treat everybody that we deal with entirely the same. Doing those checks at the beginning, and we've been used to doing certain checks. We've been credit checking people for years. We're used to doing that at the beginning of the process. I think probably what throws people out of whack is the fact that there's a requirement to carry on those checks on an ongoing basis, but so much so that we need to now scrutinize every payment and every time we receive a payment into our accounts. Glyn, is that a nightmare for agents? Because it sounds like an awful lot of work. In average tenancy, in a good tenancy, you're going to get 12 even payments a year without chasing. But we know that that's often not the case, and there's more work that goes into it. How do you see it from Kalmany's point of view?
There's a couple of key considerations. I think, a lot of people are thinking it's just about adding a sanctions check to my existing checks, checks of the landlord and checks of the tenant. And that's fine. But with all this, you've got to follow the money. And we've got lots of blind spots in terms of that money journey. So, for example, is the person paying the rent the person that I've checked on the tenancy? And I call it the rich uncle scenario. And it's my rich uncle paying. That's why we got a different surname. And also, there's when you're paying out, am I actually paying the landlord I've checked as well? So you've got to marry up those bank account details on the way out. A lot of the time, if you're doing online banking, you do what's called a proptech. You're fine. But it doesn't take much for somebody to contact you as an agency, say, "Can I just change my bank details?" I'm not really tying that together. I need to check again.
And there's nothing per se wrong with having a rich uncle. We all wish we had one, right? But there's nothing wrong with that uncle paying rent for or helping you out. There are times where people have had to have parents pay rent or relatives or friends and so on. We're not saying that can't happen. We're saying we need to know who these people are. They need to be checked against a sanctions register as well, presumably.
Yeah, absolutely. Absolutely. And it ties into what we call the other blind spots. So you've got this classic, I checked today, you're good. And then tomorrow you're on the register as well. And it's interesting is, used to be an agent and I'm going to go renting property in Cardiff. I'm not really exposed to this, but just some of the stats that have come out from a report in 2020, which was the National Risk Assessment. And their stats were saying that like 1.5% of all transactions involve criminal funds. And then the risk assessment also identified that 0.1% of all transactions involved as sanctions individual. Low numbers, but in the lettings world, we're high volume transactions every month. So again, we're sort of exposed on that area. Somebody paying us, and we're in a world where people will chop and change. We can't control who pays into our bank accounts, our client bank accounts. Anyone can. Once you've got those account details, you can pay that money in from that side. So those two sort of blind spots are really just building the need to do more checks continuously. And for me, it really comes down to your risk appetite. A lot of agents feel I've done the check, I'm okay. And I think it will come down to the teeth that Ofsted have and whether they choose to go after the agents.
And in terms of, so we talked about a likely profile of tenant perhaps, but let's talk about likely profile of agents as well. Not all agents are alike. And I think it's probably fair to say that the burden of compliance for smaller independent agencies always seems a little bit more heavy and a bit more onerous because then they are, very typically one branch, one-man bands as we used to refer to them back in the day, whereas bigger corporate entities used to have dedicated compliance departments and maybe are better outfitted for this sort of compliance. We were having a chat off air before we started to record this, and in all likelihood, we were saying that the low hanging fruit, as far as the regulators are concerned, in terms of who might fall foul of these things, are actually, in fact, the independent agents that make up the majority of the lettings transactions that flow through the UK.
Absolutely. And what's come out recently, Ofsted produced their April threat assessment report. And that report was really focused in on the property industry. And they've actually identified the high risk are the small independent agents, not the corporates. And it's because small independent agents have long-standing relationships. So sanctioned individuals, criminal individuals know this. So they're going to go and use those long-standing relationships, that landlord that you've worked with for 10, 20, 15 years, as a way to flow that money. So that report really surprised me yesterday because it sort of indicated who are they going to go after. They've said in their own risk assessment, the highest risk are small independent agencies because long-standing relationships and they don't have that capacity for compliance. Whereas we think maybe they go after the corporates because the corporates have got the money to pay some really big fines and it'll be a really great headline. Well, the reality is, I don't think they're going to. They're going to go after small independents.
So your accounts are backed and provided by your friends at Griffin Bank. So Phoebe, representing Griffin today, what is it that you could recommend to agents in terms of keeping a track of the transactions that are flowing through their accounts, and practically speaking, what are the sort of steps that we can take?
It's, I guess I can say it's easy. It's probably not easy, but one of the most interesting things that we've run into working with Glyn and other property platforms is, as agents, you do KYC your landlords at the very beginning. You do have this data, but you don't maintain it. You collect your bank details once, you have a look at someone's passport once, you check the land registry. I know that GDPR influences this, and no one really wants to get into data retention and storage and all of that fun stuff. But storing that and maintaining that is what is going to keep your bank and your payments providers comfortable, because then at least you can help yourself track your own financial crime obligations. You can provide the necessary assurance to both your regulator, if you're using a payments platform like Harmony, or if you're working directly with the bank, you can provide them with that assurance that you've run those checks, you know who your customers are. But that seems to be one of the biggest challenges we've faced. And in launching the accounts with Glyn, we were quite shocked as a bank because we are so used to most of our customers being hyper sensitive to their data and the retention, and they can provide us with kind of 3 to 5 years back of all of their customer base. It was really surprising that letting agents weren't mandated to store this, and so didn't have it on hand when we were asking the questions that we needed to ask. So it's building those controls and actually maintaining and storing and ensuring the fidelity of your customer data that's important. And then your bank can help you, like the way that we configure accounts at Griffin. So we don't work directly with a retail market. We instead distribute our products through platforms like Glyn's. But when we work with Glyn and Harmony and the kind of financial crime context they're in, we provide transaction monitoring. So the transactions going in and out of those client money accounts have rules set against them. We spend a lot of time with our customers with Glyn, and I'm sure Glyn is quite traumatized by the amount of time he's had to spend with us over the last 2 years. But working out the behavior of your customers, how we flag and screen those transactions. And so as a lettings agent, if you're working with a platform like Glyn's or the many others that are out there, we're doing the transaction monitoring for you. We're doing the KYC for you. All we need from you is the data and the understanding of your customer base. And we can help you meet your regulatory requirements, because we're a bank. We are held to extremely high standards. For any customer that has the same regulatory obligations, because we're holding the funds, the buck kind of stops with us. If you get fined, we're likely to get fined because we've facilitated that. And so it's bringing in those controls in and around your data, your collection, your storage, and then working with a bank or with a platform to actually understand the risks you're facing, and then you can have the optimum account set up. But it's not easy.
It isn't easy, and we're going to come to Glyn, who hopefully can make all our lives a little bit easier with a technological solution to this. But before I do so, just to round this point off, James, perhaps you can give us some indication from your point of view. What are the likely consequences of not complying? So if you have an inspection, if one of your clients are pulled at random, as I understand that can happen, what will be the process? What are the likely consequences that an agent's up against?
Yes, so when we get asked this question, we tend to split it down into 3 or 4 possible outcomes, or combination of outcomes. First, you're going to have quite an intrusive investigation process over you. The regulators are going to be crawling over your processes, your staff, talking to them about how did this happen, why did it happen, what are you doing to solve it? And that just takes up time, effort, money. It's quite, as I said, invasive, and it's something that a business doesn't need and can be avoided by having these controls in the first place. You then get to the sort of real teeth, and that's the fines. There is the capacity to fine millions if they really wanted to. Whilst there are sort of hard caps on the fines that they can impose, that's I think it's going to be set at 1 million or 50% of your revenue, which can obviously go quite far above 1 million. There's individual liability that can arise around this that can be taken, that if individuals have deliberately flouted the rules or sought to sidestep the controls that a firm has in place, those individuals can find themselves in hot water too. And then there's the reality that this is going to be publicised. This is going to be sort of spoken about by the regulator within the press. It's going to have such a big detrimental effect on your reputation. You're going to be tarred with either you're seen as ineffective with your controls, or that you're willing to deal with customers of this nature. And that really puts off firms from dealing with you and customers in the future.
Well, no one's going to be sleeping tonight after listening to that, because that is wide ranging, really, isn't it? Because you know that the disruption to your business is likely to be huge. There's a reputational knock-on effect that's almost inevitable. Your staff, doesn't take much for a team to get sort of spooked, if you like, by being under investigation. It's a horrible thing. Regulated letting agents of who are signed up to sort of membership bodies have been audited over the years, and those things are quite friendly because your accountant will come in, you're paying them to do an audit, and they're sort of on your side, but they're there to do the regulatory duties. But even that in itself, a friendly inspection, if you like, is a disruption. It's quite onerous. You have to answer a lot of questions. There's lots of paperwork involved. There's record keeping. Nobody lets anything slide. This is likely to be far more wide ranging. And I take it from what you've said, James, that they won't just be looking at one particular case. If they have to look at one case, they may look at all your cases. Is that right?
That's exactly right. Past business reviews are a very common tool that they like to impose. The thinking being, if there's been one slip through the net, that probably means there is a gap in the defence somewhere, and the chances are others have gone through without being recognised previously. And therefore there will be that historic look back. And that can cause you sort of further issues, as sort of Phoebe was alluding to. If your historic data is pretty poor, they're going to assume the worst. They're going to assume you cannot prove that you were previously compliant, or that the people you were dealing with were legitimate. We've got real concerns that you had a real financial crime risk exposure in the past as well.
Wow. Glyn and Phoebe, I'm going to need you to ride in on your white horses now and really save us from this. But you've got your heads around this, and you have adapted to this as early as possible. You're all over these OFSI regulations, and it's not just the boy who cried wolf. You're not trying to scare people into complying or taking certain courses of action, but you've actually built practical solutions. So, Glenn, from your point of view, how are Kalmany and Griffin working together to provide some technological solutions that can let me sleep a little bit tonight?
Sure. So with a Griffin client bank account, access through our online banking platform with Kalmany, we get given the transaction details. So it all boils down to follow the money. So when the rent comes in, we get to see those transaction details, the account name. So we're able to sort of match that up to a payee record and start to link if we got the check. So we know, did we do that one-off check? So if somebody changes the bank account detail, we can see that, and we can go to the agent saying, look, this has changed. You might need to just go and find out why. And then really you need to go and check that individual. So that rich uncle situation. The other side then that we're doing with the money coming in, we're then checking those people against the sanctions register. So we start doing a name match, and we start to feedback reports going that this has got a 75%-ish name match. You need to go and just check this again and have another look. Obviously, we get a hard match, in the sense of 100% match. We quickly act. We need to ring fence the funds, and then work with the agents, because they do need to report that to OFSI really quickly, from that side. And then just as the money goes out, we're following that with the landlord. So Griffin have always required this verification on the landlord, to know who we're holding the money for. So now we know who we're paying, and with confirmation of paycheck, we know the bank account that we're paying belongs to that person. So the Carmody client account is monitoring everything all the way through and out, and we've built those tools in for doing those. I call them the AML OFSI checks, which is an ID check, and the sanctions and PET. But more importantly, that continuous monitoring, because that's really where we're going to come unstuck in this type of situation, is those blind spots of bank accounts not from the people we checked, and the today and tomorrow blind spot of suddenly on the register.
So I'm presuming then, from my point of view as a busy agent, who doesn't want to have to sort of check everything in and out the door as it comes in, I can get on with my day-to-day life of adding value to tenants and landlords in other ways, and leave the checking side of things to you guys. I take it you'll wake me up if there's a problem.
The responsibility sits with you. My responsibility to also monitor, and Griffin's responsibility to also monitor. So you can't completely hand it over to us, but at least there's Griffin checking, there's us checking, and then your own business has that duty of care to do those checks. So if you think about it, you're really belt and braces, and the sort of protecting yourself from those exposed risks, really.
In the legal industry, I think, solicitors have long been regulated, and they've been under pressure from all sides over the years to carry out client checks, and AML checks are not something that particularly new to that sector, where it's it's still starting to take root in mine. Particularly because we're quite unregulated, as opposed to solicitors. So they're starting to put these regulations in to give us structure, and that allow us then to sort of develop processes based on that. However, there is an opportunity here, I'm presuming, for agents to embrace complying with all of this regulations and legislation, but there's a cost to it as well. So they need to work out how they can, who foots the bill for this, because potentially the cost for compliance is something that tends to just increase year on year, every time we go through sort of new acts of parliament and so on. But that doesn't necessarily need to be the way. If forward-thinking agents can get ahead of this, and it's in the presentation, but it's also in the service that you are selling compliance effectively as a service to the landlords. So, Glenn, what's your recommendation for agents?
When we go and buy and sell a house, this James will testify, we have will get checked and will be charged, and that's a very normal part of that house buying, house selling process. And really now within lettings, if you think about it, government is passing on some of that responsibility to us as agents. You can look at it, they're outsourcing it to us. It comes at a cost in terms of time and the cost of doing the checks. So actually there is an opportunity to sort of change this compliance burden to a benefit. Really interesting. The corporates who've had this oversight for a long time have had these compliance fees. So if you go and look at the likes of Countrywide and Leaders, Roman Group, they charge a monthly compliance fee ranging from £9 to £12. So actually, it's not unreasonable to charge landlords to saying, look, we do have to charge this monthly fee because we're duty bound by regulation to monitor your tenants and yourself. And it does come at a cost and expense. And I think a lot of agents have always been wary of introducing these new fees, but at the same time, we just need to explain to landlords that this is all new legislation. This is all new requirements. It comes at a cost, and it's never sustainable for any business to absorb those costs. Your business won't be sustainable. So actually introducing a compliance fee, and it's not just obviously compliance in lettings. We've got a lot more with regards to HMOs and all the other side there. It's actually an opportunity to introduce a new revenue stream that covers the cost. And it's up to you as an agent whether you just want to charge and cover the cost, or actually you want to have a small marginal markup to sort of move from that compliance burden to benefit position.
Yeah, I think one of the pressures of any industry that is advancing and progressing is that in this sort of modern day and age, your public can be quite unforgiving when it comes to sort of customer service, and they want top service, and they want to be as protected as possible. And I think presenting it as a compliance fee that keeps everybody safe and not only shows that you're an agent who takes these things seriously and is actively trying to protect all the parties involved. But I think it would give me a little bit of assurance as a landlord, in the same way that a client that is onboarding with a solicitor would find it very strange if a solicitor said to them, "Well, we'll carry out all of these checks, completely at risk and for free." One of the first things that you probably do when you're onboarding with a solicitor is, "Well, these are all the things we need, and this is what we're going to need in order to cover it." And nobody blinks an eyelid because we know there's value in that, and there's reassurance. In terms of practical steps that agents can be taking, I mean, certainly one of the most practical things you can do is make sure that you're using products like Calmany backed by Griffin, because you've got those active checks happening. But James, is there anything that you can think of in terms of practical advice that you could give to people watching this that will, regardless of the solutions that they're using, just practical things that they can put in place to lower the risks faced in this case?
Yes, I think the first one is staff training. Getting your staff aware of what the obligations on you as a business are and why you're doing particular steps, so that they understand the purpose of it and what the risk flags that they should be aware of are. Your best defense is somebody interacting with these parties and spotting something that looks unusual or just doesn't make sense. And then that allows you to engage these processes. If somebody doesn't know how to use them, they're not much use. So getting that staff training in is one. The other thing is, and sort of Phoebe alluded to this a bit, is documenting why you've got these processes, documenting how you made the decision to use platforms that we've been discussing, because you're never going to solve your financial crime risk completely. The regulators don't expect you to do that. They appreciate that financial crime will still happen. You're dealing with sophisticated parties that are looking to get around the system. But if you can show that you have made sensible decisions that are reflective of your risk, and you've got that audit trail to back it up, that will help you explain how it wasn't negligence or recklessness on your part that led to this issue.
Well, that's certainly fantastic advice, and that takes work in itself, doesn't it? In terms of sort of providing that training, but documenting your processes so that everybody's on the same page. In the event of an investigation further down the line, when individuals are questioned, in much the same way in other areas of our business, that they expect that there is a process in place. There's I suppose, a risk assessment that has also been carried out. Is that correct?
Yeah, exactly. It's as you were saying earlier, the purpose, or one of the underlying purposes of this regulation, is to bring more structure to these businesses, to ensure that they have a defined process to follow, and they appreciate that takes time and implementation, and it is an ongoing journey. Your starting point is not going to be your end point, and it's all about getting started and getting this structure in place and then developing it as you see how it performs.
certainly, I think one of the biggest, the strongest message that I take away from today and these sort of discussions is that ignoring it isn't going to make it go away. And it's likely that these sort of regulations, it's not likely to get better over the years. It's likely to increase. So getting ahead of it and getting used to dealing with it, in much the same way, Glenn, there was a time where we all used to grumble about doing right to rent checks and are we effectively being opted in as border control? But you can grumble about it as much as you like. It's a reality, isn't it?
Absolutely. And, I think what's changing is just potentially the bite that the teeth that Offset have as well. So, some of I think this is generally the first time it can come with criminal conviction. Up to this point, as a letting agent, it was very civil. So, that to me is also the government's intention. And please jump in, James. Here, their intention is quite, serious, because you're going to a sector and say we can sort of take criminal action against you, and like I said, £1 million fines, 50% of your turnover. That to me it's sort of telling me this is really obviously definitely not going away. And if anything, what we see with financial regulation, it improves for the regulators, it improves, but it does mean the compliance burden grows and grows, and the requirements of all businesses, in any sort of financial regulated sector, it just increases.
I mean, things have certainly moved on a whole lot since I started out sort of almost 30 years ago. I recall tenants coming into the office literally with stacks of cash to pay their initial rent and deposit, because if they didn't, that wasn't considered clear funds on the day. And sort of bank transfers were something that took 3 to 5 days, and you had to wire it through. There wasn't backs payments and all of, the faster payments that we're used to today. It's, I think as an agent, one of the things that comes in with all of these regulations and having to adapt is that we do, if you embrace it, you do end up acting more professionally. It gets rid of those massive areas of risk, because thinking back to it, there were so much risk involved with the way that we used to do it, and the documentation around our processes was so poor. But if you can react to it sooner and adapt to it, you can actually turn it into a real opportunity. But it also changes the nature of your business, and perhaps one day would become a little bit more seriously respected, like our colleagues at the banks and also solicitors' practices, because I think we all collectively offer great services to our clients, and we're keeping each other safe. So I'd just like to thank all of you for joining me today and giving us this time, to Glyn, to Phoebe, and to James. So thank you very much.
Thank you, David. Thank you,
Thank
Phoebe.
you.
Thank
Thanks,
you.
James.